Hello guys and welcome back in this new video. Today I'm not gonna backtest a new YouTube trading strategy, but I will backtest a new trading strategy that I have recently built. The strategy that I'm gonna to test is quite different from what we are used to on this channel. I make some changes to my software in order to backtest it. So stay until the end of the video because there are some useful information in this video that you can use it when you backtest. So I remember you that if you want to know more about my software, you want to backtest your strategy, you want to know more about it, write me at the mail that I will leave in the description. But now let's talk about these strategies. So let's take a look at some of the traits that the strategy took. For example, this one. I'm gonna show you the code of the strategy, and the strategy was backtested on these forex pairs on the 30-minute time frame. So the strategy is called EMA 50, 200, the cross, and Bolliger bands. Why this name? Let me show you some examples. So let's take a look here. What we can see? We can see that the EMA 200, the EMA 50 went below the EMA 200, and before the EMA 50 was above the EMA 200. And the strategy, some candles after, opened a long position. It should have opened it immediately after the cross, but the data that I'm using are slightly different from the one of TradingView, and also the EMA, the code of the EMA. I don't know if it's the same of TradingView. I don't have access to their code on and how they coded the EMA, but they are almost similar. So this is the only different thing. So the how the EMA works on TradingView and the data. But let's go on. As you can see now, I have opened a long position and I have closed it here. Why I have closed it here? This strategy doesn't have a specific take profit or stop loss. So the take profit and the stop loss that you are seeing now are completely random. I don't, my strategy doesn't tell me that. But this strategy exit when the data goes above the Bolliger bands up or the MA50 goes above the MA200. So I don't have a specific take profit or stop loss. I have a condition on which that must be respected before exit the trade. So this was the code, and obviously these conditions are for long. So EMA50 below EMA200, but before EMA50 above EMA200. And the condition for exit are the one that I have told you before. And for the short position, they are the opposite. So EMA 50 above EMA 200 on the last candle, and the candle before EMA 50 below EMA 200. And for exit, the close must go below the Bollinger Band's low, or the EMA 50 must go below the EMA 200. So let's see other examples that my software took. For example, this on the Euro USD. So it was here. As you can see here, another cross in the EMA. Remember the data that I'm using are slightly different from TradingView, so it's normal to see that the position is opened slightly after. And yeah, after my software spotted the cross, it opened a position and it exits here because this is a short position. We can see the cross for the short position, and the strategy exits here after the candle closes below the Bolliger Band's low. Let's see another example. So here we have a cross, a bullish cross, if we can say that. And yeah, the position was opened here and it was closed here after the data went above the Bolliger Bands up. So these are the basic conditions of the strategy. But now let's take a look how it performs. As you can see, the strategy performs quite well. We have an average success rate of almost 55%, but the problem is that during the time the strategy was tested, your account would have blown up. As you can see, we are negative here. So what does you have to do here? You should have added money. That's not good. We are negative. But yeah, in the in total we are profit. We have the account now is $3,000 during the time it was tested, so from 2020 to 2023. So in 3 years the account um, grow was really good. But the problem is here. So let's try with statistical analysis to improve the strategy. I didn't mention that, but the strategy is already statistically profitable, as you can see. But the problem is that, yeah, it would have blown up your account. Yeah, that's not good. This strategy with not static take profit or stop loss, it's quite dangerous because you can, in a night, you can lose all your money or you can double it. So it's quite dangerous and it is only for entertainment purpose. This video, I'm not a financial advisor. I remember that must be clear. I'm not giving you financial advice. This is only backtest. But now let's try to improve the strategy with statistical analysis. I have already downloaded all the trades that the software took, and what I have found. I have found that the strategy performs slightly better with a long position rather than with short positions. Both of them are profitable, but yeah, let's take both of them. And the criteria that I used today to improve the strategy was ADX. If you don't know what is ADX, check it on the internet. It's an indicator, public indicator you can find everywhere. And the condition on the ADX is that I'm checking in the candles before, in an interval, in an interval of candles before, that at least one of them has a DX above 25. And what I have found that if you have checked at least for a one candle with ADX above 25 and the last 20 candle almost, the new average success rate would have been almost 60% for long position. And for short position, it would have been almost 53. Not good as long position, but we have improved the strategy by 2 points and log position for of 3 points. So quite good. And yeah, let's try this criteria on the strategy and let's see if it's really profitable or not. So let me uncomment this line and let me uncomment this line. Basically, here I'm checking for the X, that at least one candle in the last 20 is above 25. So here I'm checking that the result is true. And now let's run again the strategy and let's see how it performs. So let's run again. Okay, as you can see now the average success rate improved, but we were not able to, I was not able to not blown up the account. You would have you would have went to zero by risking always 1% of your account. But in a total, the strategy would have been profitable and also statistically profitable. That's it's a problem of every strategy that doesn't have a specific take profit or stop loss. You can double your account or you can lose it. Yeah, that it is. That's how strategies without take profit and stop loss work. So that's it's an important thing that you have to bear in mind. So remember always to use take profit and stop loss because you can lose many money and yeah, but do what you want basically. If you want, do it, do it. I'm not a financial advisor, basically. But yeah, So let's try to run the strategy on the test dataset and let's see if the confidence interval is respected, if we are profitable also in the test dataset. Let's see. Okay, as you can see, the average success rate is in the confidence interval we have calculated before. That's very good. The strategy was profitable and also statistically profitable on the test dataset. But as I said before, the strategy has this big problem, and I would not suggest you to do that, but do what you want. This is my opinion. I'm not saying you to do it. So, in conclusion, I would say that the strategies without the take profit and stop loss are very dangerous. Pay attention. I'm not a financial advisor. I remember you that if you want to backtest your strategy or you want to more info about my software, write me an email that I will in the description. I think for this video is all. See you in the next video. Bye.